It's a market where participants are trying to get ahead of the Fed's next move. Joining us this morning to help us take a closer look at what's on the minds of traders into the cash open. Got just the person, Bill Baruch, President of Blue Line Futures, here to help us dive a bit deeper into, some of the price activity we've seen, the risk on tone, Bill, and, thanks for sharing part of your Tuesday with us. No indication of any sort of rejection of these all-time highs as yet. It appears as if the bulls remain in charge, Bill.
You're right. And I've taken a little bit of a cautious approach. I'm still bullish, but I was thinking maybe consolidate for a little bit more of a period of time. And we still may get that, but very healthy pullback from through yesterday right into the thick of the strength during the Fed day. That's where really the volume was from 52.70. I'm thinking of gold for a second. 52.70 up to 52.80. That's where all that strength was kind of breaking out. And that's where we really held into much of yesterday's session and responded overnight tonight.
Well, I'm not surprised to hear you a bit confused by gold and the indices because both of them are at these all-time highs, right? We're going to be covering that as well here. But yeah, I would agree some consolidation at this upper level might be healthy, right? Tough to sustain this kind of momentum to the upside. But the Fed really green-lighting things last week, I feel like, right? Kind of staying on track in terms of 3 cuts, but also really speaking very clearly about how the fact that we've seen peak.
Yeah, funny thing is with gold and the Russell 2000 always many years have had very similar handles. I think as we come out, the markets responded very well to really the Fed leaving the dots and showing the 3 cuts this year. But I think that's going to continue to be a tailwind. I expect the market overall to really have strength that can last through this year. There could be and should be some point in time where we see a nice consolidation. It's going to be tough to time. I'm not really trying to time it. I just know that we maybe have had some sort of peak enthusiasm here in the near term, but we've had peak enthusiasm many times. I mean, from the way I'm looking at it, overall is we're remaining in what we're doing on our wealth portfolios, remaining pretty well allocated. Only somewhere between around 3% cash. But I've bought a cushion of puts, about 0.5% of the portfolio, kind of just work through that. End of month May puts to just really protect. And one on the future side, kind of looking a little more cautiously and just kind of waiting, stepping back and waiting to see what kind of how things develop here in the next couple of days.
I can understand the caution, right? At these elevated levels, the optimism, right, can't continue to this extent forever. But also respectful of the trend, right, to the upside. There's multiple headwinds out there. I mean, headwinds to the Fed's 2% initiative and Fed's progress on getting to that level, right? XLE, I noticed the other day, yesterday, energies have been one of those headwinds, the ETF to a new high for the year.
Yeah, I mean, everybody is worried about inflation coming back. And here's the thing. I mean, inflation is going to ebb and flow. One of the reasons why we had the very enthusiastic reaction on last week was when Fed Chair Powell seemed very confident in the path of inflation going to the target of 2%. Okay. He even called January and February given seasonal factors. He even pointed to that. So I think the enthusiasm, that's where my caution now comes, is because we're going to start to hear from other Fed members who may not be that enthusiastic. And I've called it the Jekyll and Hyde effect, where we get, one message during the meeting, and we may see a little bit of the, reversion in between meetings. And that's what we could get here. But, I look at the inflation. I think I was on with you previously talking about these 2 numbers. 3 is a trend. We'll see what this third one comes. And then PCE, which we get on Friday with the markets closed, has typically been a little bit more anchored towards that target rather than versus the CPI number.
Bill, maybe a little bit more two-sided rhetoric from Fed officials would support what you mentioned in terms of a little bit of consolidation. I think it was the word that you used, right, at these upper levels here. A little bit more two-sided trade, a little bit more horizontal overlapping type price activity relative to the vertical type higher highs and higher lows we've been seeing. Hey, you mentioned the data. Talk to me, because PCE data due out on Friday. There's a lot of focus on that, again, with the market closed. But how about at the bottom of the hour, durable goods orders here today?
Yeah, the PCE is the Fed's preferred inflation indicator. Usually, it is Good Friday. Sometimes we've seen non-farm payrolls come out on Good Friday, and you get that early open at holiday hour. We don't have that. Markets will be totally closed. Should be an interesting open Sunday night. Durable goods. I mean, I think the overall trend in what we've seen broad data, there's been a cooling. However, there has been some trough in the manufacturing. I think we've seen services come off the peak. And that right there, I think, is overall favorable to risk on in some of the Fed's narrative. They've wanted to see that services sector cool off a little bit. There's obviously people, many experts and pundits talking about some discombobulation, if you will, in the job market and what we've seen with a lot of immigrants coming and creating job flows. And so there is a lot of lumpiness throughout the data. And I think it's more about not one data piece, and the market hasn't really reacted to one data piece, whether durable goods today is hot or cold, but it's really been seeing, week by week at a time and pricing in narratives given sort of a trend in data. And we've been seeing a little bit of cooling. So I think that plays well into the Fed's narrative outside of the inflation numbers.
Yeah, I would agree that and argue there are multiple contributing factors to this environment that's been very favorable to the risk on. To your point, a couple of them, and also earlier the point, it's not just the Fed though, right? Because we also have earnings. Some of the quarterly results here have really contributed to this run-up we've seen.
Absolutely. I mean, it's been, we've seen some really great numbers over the past month and a half. And, but there's also been some questions. I mean, look, most recently, Nike and Lululemon. I mean, we don't own any consumer discretionary names unless you consider Tesla and Amazon consumer discretionary, which they do fall in that category. But other than that, I mean, Amazon is our #1 holding, but we've seen some really strong numbers overall. I mean, look what NVIDIA's been able to do and really lift boats and continued kind of forecasting those numbers in the future earnings higher and higher. I mean, but there is, some different shifts within the market. Look what AMD's done recently, and that hasn't performed, or Apple. So there's other narratives outside of earnings maybe weighing on some of the strength here. So kind of watching as we move into next quarter. Are we going to see some of these names and some of these companies take a moment to take a breath and maybe bring in and rein in some of the expectations? That would align with some of my cycle analysis, and that's kind of what I'm looking at here as just entering a period of caution. I mean, if people say sell in May and go away, it's been a little bit more than that for me, looking at what was an October 2022 low, a hard low, and really sort of this is a bull market I see through 2027, but there is intercycle tops, and that sort of aligns with this spring where we could have a little bit of a cooling. And I'm not even calling for it being a correction. I'm calling it for leveling out, a little bit of a leveling out here period before we go back up again.
Hey, nothing wrong with taking some profits on the way up, right? Nothing wrong with locking in some of those profits with some options, as you mentioned, some of the puts that you were talking about into the next couple months here. But talk to me as we look to potential indicators that this market's starting to turn or not just consolidate or not just go sideways, but maybe give way and start to reverse a bit here. Do we look to some of the other products? You mentioned gold, right? Also to a new all-time high recently. Bitcoin holding above 70,000. I mean, these are elements or reflections thereof of that in terms of that risk on tone.
Yeah, talking about gold, talking about Bitcoin, it's tough to gold a little bit more so, talk about them without the currency factor. And that is one of my concerns is the currency factor. One really got me moving in the direction of starting to be cautious or implementing some hedges in portfolios is concerned that the U.S. dollar could strengthen. You go back to last week, you look at the Japanese yen, and despite the Bank of Japan hiking rates, we saw a new low in the yen. We then saw the Bank of England, the reaction there for the pound. The cable was sharply lower. So we've seen some weakness across the board in other currencies, and then the Chinese yuan became unhinged, Thursday night into Friday morning. Now some of that weakness in other currencies has reverted back, and the U.S. dollar index is lower today. But I'm watching that very closely because the equity markets have a very negative correlation to the dollar. If the dollar strengthens, you're likely to see some pressure on equity markets. Same thing for gold. So I mean, gold we're seeing a good renewed strength. To answer your question here through today, a nice little bottoming out. The support really held on the settlement price of Wednesday. So just for viewers out there, on Fed days, The precious metals settle at 12:30, silver maybe 10 minutes earlier than that, but gold settles at 12:30 Central Time, and then you have the Fed announcement at 1 Central Time. So settlement prices come out before then, which could create a gap in the charts. So that gap was really covered. We had a really good hold of that. Even a settlement on, I think, Fridays was right at that level, and we've responded to hold that, build a little inverse head and shoulders yesterday, and we've seen some strength here through today. Now, one thing I am worried about gold is we are moving from the April contract into the June contract. Yesterday, April options expired. Today, we have really, June is front month. June's about $20 higher. We've seen it in the past where this roll premium can actually create a little bit of headwind as it's, new buyers are buying something $20 higher. But that doesn't seem to be the problem here this morning. There, some obviously geopolitics in the air from Russia, and the attack on Moscow, as well as there's some Israel and Hamas talks that broke down early this morning too, and some of those currency factors. But I like what we're seeing in gold. But I'd like to see silver participate more than anything at this point.
Bill, we're going to talk a little bit more about metals in the next block here, and I like the focus on gold with the U.S. dollar because that's actually my chart of the day. I'm going to argue that, well, back in the beginning of March, the dollar was 103.90, gold was at 20.50. Look at where we are right now. The dollar's basically right at those same levels, and gold's at what we're trading 22.20 right now. So kind of, again, focusing on the dollar and the relationship to gold. But talk to me a little bit, a quick thought on Bitcoin here.
I'm pretty bullish on Bitcoin. I kind of wanted to see, see how this reaction against 70,000 was, and we've settled in a bit. So since we've been pulling back, in my commodity trading advisor, it's a commodity fund. Overall, what I've been looking at is building in a Bitcoin call spreads with the micro Bitcoin that the CME group has. It's very liquid. It's becoming more and more liquid. I'm using the June 85,000, 100,000 call spreads and just really building a nice position in there. I think if we start moving out above 70 as we moved here in the recent day, we could and move out. If we were able to move out above those previous highs, we could really see a good extension into 100,000. I think that's on the cards here for the next 60 days.
Bitcoin structurally in a very similar situation here is what we're looking at in terms of gold futures here, and for that matter, the indices, right? I could argue they're all at these all-time highs. Bill, really appreciate you sharing part of your Tuesday morning with us. Bill Baruch, president of Blue Line Futures. Coming up, we're talking commodities.